Alright, hey, how's it going, guys? Just gonna make a quick video for all of you on the newly released section, on the newly released section 5 material. So you might hear some background noise, I'm sorry about that, but let it be. So I just posted this for you guys. Let me open this original so you guys can see it. There you go. And basically, the idea of this entry is to have your POIs or your S&Ds or your step 2 of your process to act as a liquidation rather than an actual area, and then still get involved on that S&D play once we're looking at the MB shift. So I'm going to talk about this and show you in a second. So the main way this is going to work from 1, 2, 3, the steps for this trading plan, is to form a bias about where you think price is going. So in this case, you can see, like, I'm saying, okay, it's going to go bullish. This is my expectation, is that it wants to continue bullish, maybe because it's traded higher, broken some kind of structure, maybe it's still heading for some kind of liquidity on the left. So we're going to talk about this all in a second in a real example that I just took this morning, right? So once you have a bias, you're going to go down to a lower time frame. And again, this lower time frame is going to depend on basically the higher time frame you're using. You can maybe use a rule of 30. You can play around with these time frames. This is also gonna come from that experience side, but you'll see what I did. And you're gonna use the overall lows that are formed overall in that trend as a liquidity story, right? So basically, you're gonna use those lows as their own potential liquidations. And what you're going to do is your POIs are going to be the liquidations of those lows. So when that low is liquidated, that's when you will look for your confirmation. And the confirmation will once again be on a lower time frame. And this is called the absorption entry criteria for the fact that it's looking to enter off of a liquidation of a low, right? Or liquidation of another low. So this could have kept going and stopped here, and this is where you would look. And then what your confirmation is going to look like, and you can play around with the confirmations. You can, again, do double MBs, same thing as the others. Or, in this case, the best confirmation I've noticed for this is to see price shift higher and create a big MB, right? And there's a big momentum shift, so you can clearly tell it's moving higher. And as it does that, within the MB that's created, there's an inefficiency left behind, which is an imbalance, right? And we're going to show you that in a second. And what you're going to look for is as price comes to the imbalance or the refined S&D, doesn't matter because it's hitting the MB. So basically, you want to look for it to come into the imbalance and begin to give you an entry. You're going to look for either a fractalized double MB, right, or a CS. I prefer the CS because it's just easier and it's better, I believe. So that's what I'm going to show you guys right now and show you my trade this morning. So this was my overall trade right here. It was just a normal FTMO demo account, 200K account. So I was just looking for 10%, and it looks like we just did that today. It was a really big move. So this was the move that we profited on. That's why it was so nice. Just a 1% risk, but ran 1 to 10, 1 to 12. So that was really easy. Actually, it was a 1.5% risk. But we'll talk about why this happened and what we did, right? So I'm just gonna break this down for you from that point of view. Now, if we go to the daily, price at this time was right here this morning, right? So this morning, all we know is that this is what price is doing, and currently, right, we have to ask ourselves, what's the story of what's occurring here? Now, the story of this is that price was coming down, making these lows, making these lows, making these lows, right, just playing around, and then it shifted above impulsively, right? So right now, the thing that makes the most sense for me is to see price continue rolling itself upwards to at least this liquidity to clear it, right? So for me, I'm just looking at where are the highs and lows, where could they want to be getting out, and what can my bias be? So right now, very simply, from a daily perspective, the bias would be to see highs cleared. And that's it. All you know is you want to be bullish, and that's what we're going to look for. So as you start to step down at time frames, right, we're going to get into the morning of today. So this was the morning of today. And then, of course, I get on at around 9 a.m. for my market. So my market started at, actually, I think it was at 8:30. So we're going to go to 8:30 is when I really got on. So we'll go to 8:30 just like that. So this is when my trading day pretty much started. So we're just going to be honest with this. There we go. All right, so that's where we're going to look. So let's wait till price gets there. All right, so just before it, there we go. Yep. So I got around here, right? So, and just before that, because that's already on the dot, but here we go. This is about when I got on. So again, it was a perfect entry basically when I got on. But once again, because it's NAS, what you're going to have is you're going to have stocks open at around 9:30 a.m., right? So you know that basically stocks or US 100, US 30 are going to have the most movement usually during the American sessions, once again. So as a result, if you're on during the morning of the US session, there you're probably going to find these larger movements. Now, because we know we're bullish, right, we want to look for the anticipation of liquidity lows that we want to work with. So at this point, when I got on, I looked at the 15-minute and I said, okay, where are there liquidity potential lows that I can get in on? Right, so there's this low right here. You can see this little swing that was made here. So I can draw that out. That's one of my potential liquidity sweeps, right? So that's going to be a POI if price is under it, which it is, but we're going to look at that in a second. Then you have another one right here, That's the one I had drawn. But then I looked lower and I saw these equal lows. So all I did is I moved this basically to here, right? And basically said, okay, one of two things can happen right now. Either A, price is liquidating this low and wants to go long under this, right? That's the absorption of that low in an already bullish setting with highs formed on this top side. So it's a nice liquidity target to have, right? So that's going to be my first target. It's actually where my first partial was. And basically, that's that, or it can come down into the start, right? Absorb here, and then give us our entry criteria to go long from there. So that's all I had in mind. And then because we were already here, I stepped down to the 1 minute just to reconfirm this. And what I'm looking for is MBs, right? So some of you might have already been using this MB right here, and that's not wrong. That's the last down move before an up move, and you're waiting for it to validate. Oops, sorry. And you're looking for it to validate before looking to get in. But as you know, MBs can be subjective, and you can choose how you want to view your MBs. And based on the time frame you're on, right, as we're playing around, you can see that maybe on a 4 minute, you don't like this candle, and instead you go, okay, this is some clear down push, right? You go between some time frames, 3 minute, yeah, clear down push, right? From that high to that low, great. You go to that 1 minute, it's the same thing. So I actually chose this off the 1 minute. You could have chosen this one too. Both are valid. But for me, I like the fact that we have this huge down move off these multiple time frames, and I see this as its own last down push. So for me, it makes sense that if price trades above this and does it impulsively, that there's a good chance I can get an entry off there to go long, right? So as I watch this, price was just playing in here. Again, if it just kept going lower, this would be canceled, and I would just wait for it to come and potentially liquidate that low and do the same thing and just look for an entry, right? So as you can see, what we've done is we found our bias, which was bullish on the higher time frame, and we were reaching up for that blue area, right? Then on the lower time frame, we found that structure we're in, and we looked for areas that we could see liquidated to go long during our specific session. And then all we're doing is right now we're in that area looking for an MB to form and looking to go long. So we're waiting for an MB to form, right? So the MB forms, boom, right there. So now prices moved away impulsively from the MB, formed the MB, and at the same time, as you can see right here, I'll make them blue so you guys can see them, create an inefficiency within price, right? So here's the inefficiency left behind. It left behind one right here as well. So both are valid. You can have both of them shown here, right? But now what we're looking for is the mitigation of this MB, aka, now we have our three things playing in motion. We have structure, SND, confirm, and then we want to go long from that confirm. And that's all within our higher time frame idea, which is still based in structure, which we know is bullish because of what we looked at on that daily or the higher time frame. S&D, which in this case is going to be the idea of absorption, so it's either this low or this low, so price could, it could just break down like that, and then we could have gone long from there, but instead, because it's breaking up now, we have that confirm, which is making that larger MB, right? Last down move before the up move makes that MB, so now we expect it to go long from there, but on top of that, we look for confirmation of the MB in the form of inefficiencies created within it, because we understand that when there's an inefficiency, these act as what? Demand zones, right? So in there, there's going to be demand. So we know that if price trades down into those, that's what it's filling, but we don't need to use the exact zone because we're within a zone already. So if price comes in here, all we're looking for is a CS entry to go long, right? So I was waiting basically for it to come back down. You'll see it did nothing. It kind of went away. Now, again, this is important because across timeframes, yes, it's making shifts, but this MB is valid because of the non-mitigation here and because of the impulsivity, right? And because our top side areas that we're looking to deliver at least first, right? So these equal highs. And why are we looking for equal highs? Well, because we're already bullish. So we know equal highs that are above price when you're bullish are more likely to be ran. We don't care about lows or equal lows or anything like that because they're not part of the game, right? Part of our game is understanding that if we're bullish, we're only looking for the highs and where it could liquidate and then where it could continue to, right? That's that weekly zone that you saw, or that daily zone that you saw, the daily high you saw a second ago. So we have these inefficiencies within our zone. The MB has been created across timeframes. We know that MBs are subjective, but they work across timeframes, and we see a clear displacement and a clear momentum shift to the top side. So for us, this is a valid MB now, and if price comes down, there's a reason to still go long. So as long as it comes and fulfills this and gives us a CS, we are good to go, right? So I'm going to show you what we did here. We're waiting for our CS entry, so nothing happened, right? Then price came right down into it and then began to... right, so actually at this point, I'd actually missed this, but you could have taken this too, right? You can see price came into it, began to go up, created that down move, then you could enter on that CS candle like this. And once again, as you remember, even though there's a CS candle, we're not protecting under the low of the CS, we're protecting under the low of the overall MB, because this is the MB holding price. So we're just doing this as a confirmation that the MB actually is valid and has orders within it that want to hold. So this could have been your entry right here, just like that. Right, but then I'll show you where my entry was. So I saw this down move into it, right? saw this down move, and then right there, when I saw price come in and start going higher, that's where I entered, right? Because we're seeing that this inefficiency was holding. It's hitting some demand in here, all good. So my entry was actually right here, just there, right? So I'm going to get rid of this one. But this one was also valid and still would have held. And my stop loss was just below this low, right? And then I had my first TP set here for a partial. And again, I'm risking a little bit more on these because these are bigger SL kind of variants, but it's easier for me because it means I don't have to sit in front of the PC as much. So I've just been testing this for the last few weeks, and I mean, it's been working really well. So I decided to go ahead and try it on FTMO, and that worked out really nicely today. But nonetheless, that was my first partial that I was looking for, right? So you can see price came a little deeper. If you wanted to, you could also double fractalized MB this, right? So that was that CS. You could have entered on that CS. You could have even entered on this CS, right? There's an entry right there as well. Stop loss below the low. You could have also done the fractalized MBs, right? So nothing until here, right? Fractalized MB number 1, fractalized MB number 2, and your entry could have been right here, right? So that's just a better confirmation. More probable, probably a higher win rate because you're double confirming a zone. Stop loss still under the low though, because this is the MB that's protecting that overall move, and price can easily now come a little bit deeper if it wanted to, right? So my entry was off of this last down move, right? I put a buy just above there, a buy stop loss just under the low, and I did this with my tool, of course. So I was just on stop order. I had that on, and all I did is when price was down there. So let's go find out where it was that I entered. So I entered somewhere down here, right? There it is. So here's that original move, right? Price began to go, came up, came back in, right? So it's hitting that overall MB. Remember this right here. Let me go insert shapes, rectangle. So this was that MB pretty much right here, right? Price traded above that MB impulsively and left behind. Let's go like this. Left behind that entire thing right there. And then within that MB, it left behind the inefficiencies, right? And right there, price came down into the inefficiency. I saw this down candle. And that at that moment, I pressed on for stop order, right? Just above that high, just like that. Stop loss below the low, just like that. Let go. It's not going to work right now because of the fact that price is above it. But let's just go limit just to show you how it executed. Right, just did this. Drag down, stop loss under the low, let go. Okay, so is the market closed? Is that what's going on here? Oh, did the market close? Oh, the market closed because it's rollover session. But anyway, I set it up just like that. And then as price tagged me in, you know, it went into a little bit of drawdown, came up, went into a little bit of drawdown, started coming up, came down, broke this MB. The second this MB broke right here, that's when I moved to break even, because for me, you know, once again, we're following MBs. It didn't make sense for it to come back. So we can follow this again, right, just to show you. So creates that, boom, starts running upwards, creates this inside MB right here, just like that, then breaks the high. So at that point right there on this candle, I moved to break even, took my first partial right here, and let the rest run to where that daily expectation of where I wanted to see price go. And at break even, we just let this go, do its thing. It might have been on this MB as well. Maybe I was watching it on a higher time frame, because if you're looking at a 5-minute, right, then the MB is right here. And then that shifts above and you go to break even. So either way, it would have worked. It would have held. And then we just delivered very quickly and nicely into there. And that's the overall idea of this entry criteria. And that's based on the idea of absorption and liquidation, right? So what you're doing is you're predicting a higher time frame narrative, right? You're using that narrative to decide where is price going. Probably wants to reach for the high. Okay, great. So I know I want to be bullish during the day. Now, when I'm bullish during that day and I go inside, during that bullish day, there's going to be lows made that will function as potential absorption areas and other lows, right? So price could either go here and then just keep going and then give you an area for entry here, or it could just come down, grab that low, and that's where you're looking. So you're not looking at a specific zone on the left. Instead, what you're doing is you're looking at lows that want to act as absorptions for a given move. And this is actually a great thing to use for something like NAS or for stocks, because as any of you might know, stocks are very on a much lower probability basis come all the way back to an S&D and then go long. Instead, what happens with a lot of stocks is they will kind of run something like this, right? They'll just run like that. But what's happening is inside of these areas on those lower time frames, and what I'm teaching you here is you're going to have moves that begin to put in something like maybe this, right? And what they do is they'll come and clear a low, and that's where you can look to enter off that double MB and take it long. And you can have that delivery happen very nicely, especially if you have an idea about where price wants to head using a higher time frame bias. So the idea here is, you know, again, there's 3 steps still that are making up the entry criteria, right? Just like we have SSC for our normal trading, you have structure, which is bias in this case, right? So you have bias, you have S&D, which in this case is liquidity, right? Because you're looking for that liquidation on the basis of absorption, right? Absorption. And then once again, you do have confirmation, which in this case is the MB plus the CS within, or you could say plus, an imbalance, right? Because what you're looking for is, yes, you want to find the MB, but you also want to make sure that when price comes into that MB, that it's hitting something that makes sense under the criteria of, you know, is there real demand within there? And are they fulfilling that demand, or are they just trading right through it? And if they are, there's no CS entry. And if they aren't, well, once again, like you saw, you'll get that entry, which on its own can either be a fractalized MB or not. And then you're still protecting yourself under the overall MB low, because you understand that that's a liquidation, not just there, right? You could, I mean, you can see it would have been a loss here if you just moved it right with it. But again, you know, you can have much higher R. So that's the overall system, a very simple system, but once again, a system that you have to test if you want to use it and be profitable with it. Open this originally for you, and we're just going to talk about it one more time, right? Bias is created, so that's what was my daily time frame, heading for the highs, right? Looking for that high to be headed for. So I know I'm bullish. Go to a lower time frame as price delivers during the session I'm looking for, where it's the most liquid, has the most movement. Draw out lows that, you know, make sense to you to be liquidated. If price then heads to and liquidates them, and then shifts under their liquidation. So again, if this was a low, and let's say you didn't have this low drawn, and it went all the way here, it doesn't really make sense to keep confirming. Why? Because this doesn't act as a super liquidation, instead it just acts as like price breaking down, right? Versus when price comes just below it, right, and begins to shift and does something like this, well, then you can reconfirm it, right? Because then you're getting an MB shift. The inefficiency is present within there. As price comes back into there, you confirm again, and you throw your SL under the actual MB because that's what functions as the actual protected low, as I teach in the webinars. And then you look to take yourself to the high end as per that bullish bias overall, right? So in this case, it was those highs. So just to show you that in motion here, daily had the high I was heading for, very bullish days. So expect the next day to be bullish. I did the same thing on this day, I expected it to be bullish. And there were plays in here, but, you know, not as good because it didn't keep running, but doesn't matter because, you know, with the expectation that it's bullish, we know that not every day is going to be bullish, but is more likely to be bullish. If it began to go bearish today, I'd probably wait until price maybe came for this MB right here, right? And then would have looked for the same thing, because then it would make more sense, and then I'd be bullish from there. But in this case, the day starts, it's already bullish, right? We come into it. As we come into the day, so the start of the day was around here, but then the start of my session was right here. As I come into it, okay, it's already bullish, right? It created highs, so I know it probably wants to run these at least during the session. So even if price, you know, might have wanted to do this and then go short, that's fine, that's part of it. And, you know, I would have secured whatever I secured on it. So this was a really nice run. But I drew out the lows I wanted. So this was the low I wanted to see liquidated, because there's lows here. So it makes sense to use this as an absorption low, or this low right here, which was created. And for me, it made sense that if we got below it, there could have been an absorption down there. And you can see what I mean by, you know, if price just broke down and did this, and then began to set up here, it doesn't really make sense to use this setup because it's liquidating this far away. But here, right, you have this low, liquidates it, sets up inside there, gives you that momentum on that lower time frame, right? How does that look? You go to that 1 minute. There you go. You have that MB shift to the top side. Let's go look at that very quickly. There you go. That MB shift to the top side. And again, you can look at this on a 5 minute too. Both are valid, right? Down move, up move, right? That could be the fractalized MB, you could call it, or maybe on a 3 minute you're looking at this, right? Clearly, where's that last down move come from? You could have looked at this one, but if you want to be more sure about it, you could have used this one right here, right? So this, and you could have even used this one, right? They all would have worked. Then price moves away momentously, right? Shows you that it wants to displace, shows you that there's a reason that it's going higher, shows you that it's actually taking out the liquidity below here and then shifting, right? And as a result, we go ahead and find our inefficiency. So on this time frame, it would have been these right here, right? You can see same thing would have worked, right? But on the 1 minute, it was the lower inefficiency inside of there. So either way would have been valid for whichever ones you chose, even 3 minute. Price comes into it, down move, we buy, stop the down move. There's that CS entry, stop loss below the low, good to go. Or wait for the fractalized double MB. So again, same thing, MB1, MB2, you can enter that. Or you could have even waited further and went MB1, MB2, invalidated, makes an MB1, MB2, and then you would have taken your buy here. But that would have been a lot later, and maybe you canceled that. But remember, stop loss would go below the low, as we speak about, right? So in this case, I just followed that lower time frame CS entry. So the CS entry here would be, once again, what is the CS entry? It's just the down candle into your confirm, and then it gets traded through, and that's your entry, right? The buy stop of the down candle. So the way it would look like is, here you go. Price comes into your zone, MB is already formed, inefficiency is present, therefore you know there's mitigation there. If price does want to go long from here, you know it's because it's mitigating these points and wants to go long. So you set up your buy stop just above it, just like that. Stop loss not below this low, but below the overall low. And you look to target highs as we go. And that's your entry criteria. And that was that beautiful delivery that I had this morning. And that is how we do things like this. And that's all. So yep, thank you for watching, guys, and I hope you enjoyed that.